Hello and welcome to the Trading with Ashley show. I love teaching what I'm about to share with you because one of the reasons that I decided to retire young was that I figured out that you do not need millions of dollars stashed away for retirement. When you are selling options, you can actually retire on much less. And I am living proof of how this works. So let me qualify before we get into all the nitty gritty details. Let me qualify this by saying I'm not a financial advisor. Do your own due diligence. And I am about to take you through some incredible trading opportunities, but it's using one particular stock. I do stress diversification, but for the purposes of showing you how this can be done, we are going to concentrate all of our attention on one stock and the premium that it produces, both selling puts and selling calls. So in this video, I am going to show you how to take $200,000, split it up, 100,000 to sell puts and 100,000 to actually buy the stock itself and start selling calls. And with those two dynamics combined, you are able to produce over $8,000 a month in premiums that you can live off of. Now, this is just premiums. This does not count the really juiciest part of running the wheel strategy, and that's when you put the shares and you ride a stock up and the stock is taken away from you. There's so much more money to be made in between the wheel strategy, in between the premiums and sell. So if you were to do this and just receive the premiums, which the conditions have to be perfect to just receive the premiums. But if you are to do that, then you are going to be creating a 53% return on your money in 1 year. So with a return like that, that is plenty for most people to retire young. Now, again, I want to qualify this and say you shouldn't just have all of your nest egg in one particular stock, but this illustrates for you how it can be done. And you'll also see why, with someone's portfolio of my size, why I have almost $400,000 in Palantir alone, because I am of the belief that this company is the future for AI. And the reason I have so much confidence in the company and the reason that I have been sharing with all of my viewers all the confidence I have in Palantir is because I am able to see firsthand how much Palantir is needed, at least on the commercial side of the business. Now, I fully understand that they have so much going for them on the government side of the business, and that does provide some stability to the stock. But the commercial business is just open wide for Palantir. And the reason that I believe they can make such a difference for all the businesses that employ them is because of my own personal experience working in corporate America and seeing all the inefficiencies that took place. We actually hired teams of hundreds of analysts to help us to figure out something that Palantir can do literally in minutes with the touch of a button. So I see the value is there. And then when you have these companies that are actually using Palantir competing against companies that aren't using Palantir, it becomes very clear that for them to level up, they too need to hire, if not Palantir, a company like them to actually compete better. And Palantir is just light years ahead of other companies that are trying to get into this space. So for right now, there is a little bit of a moat built around them, and I am exploiting that to my benefit for all the premiums that I can make and all the additional money I can make on the stock. When I actually first started trading Palantir, it was around $12 or $13 a share. Now, I know a lot of you out there, you were actually trading Palantir when it was $5, $6 a share. So hats off to you for seeing something that early in the game. But it was funny because I look back on some of my older videos when I was explaining about Palantir and the strike prices were $14, $15, $16. And now here we are sitting on flirting with an $80 strike price. And the best part is, for those of you that are just hearing about it, you're still early. I mean, this stock has got such a long runway, and I plan on actually putting this part of my portfolio to my children, and I want them to brag to all of their friends about how my mom got into Palantir when it was just trading at around $12 and $13 a share. So let's get into the details. Our first part of the trade is going to be selling puts with $100,000 in capital. Now, let me explain what selling puts is to those of you that aren't familiar with it. When you agree to sell a put, you are actually putting up the cash to buy a stock at the strike price that you select with an expiration date that you select. If the stock does not get down to your strike price by your expiration date, or really when the market closes, sometimes there's early assignment of a stock, but 9 times out of 10, it's going to depend on the actual price when the market closes. If it's above your strike price, you keep all the premium that was paid to you to put up your cash for the trade, and then your money is released to you for additional trades. Plus, you have the extra money that you made from the premium. So that's the selling put portion of what I'm going to teach you. Now, for this part of the trade, we are going to use a strike price that is conservative. We are going to be looking at a delta that is below 0.2 on the option chain, and we're going to look at a level of support for the stock. So in the event you are put the shares, you're proud to own the stock at this particular level, and there's a lot of potential upside as the stock continues to push forward. So that's the part of the trade we're about to go into right now. Our first order of business is to evaluate our stock on the actual technical analysis. I am working with Yahoo Finance, and I am looking at a combination of factors. And I'm going to take you through those. But before you sell a put, you want to look at where a good level of support is for the stock, because ideally, if you're put the shares on the stock, you'll be able to enjoy price appreciation as it rides back up. So if you are looking at Pltr on Yahoo Finance and you have these technical indicators pulled up, one of the first things that stands out to me is right here. The RSI is showing to be at 79. We are looking at the 6-month chart because we're selling monthly options, and this is showing you that for the 6-month chart, we are extremely overbought, which means more than likely Pltr will be pulling back in the near future. So if you're going to do this, it's best to wait till Pltr actually does pull back. You're going to get more premium when you sell a put on a red day, and definitely you would like it to be closer to a level of support. But for this example, we are going to look at the premiums that would be produced if you were to sell a put now at this moment in time. And so where do we begin? Well, let's look on the band itself. So you see we're at the top of the band. If it were to pull back, one of the first levels of decent support for this stock would be right here at the middle of the band. This is showing to be around 64.37. This is the 20-period moving average. And so a good starting point to sell a put might be right at around $65. Because if we are put the shares at this level on a stock like Pltr, more than likely we will be able to enjoy the ride back up to the top of the band where we are now. And then we get to see our stock that's put to us at around the $65 point go all the way back up, and we get everything in between plus the premiums when we're selling calls. So that's the ideal situation. And so if you were to try to do this play, I would wait until you see us getting a little bit closer to this middle part of the band. All right, now that we know that, let's go look at the premium that we can get if we are selling puts on Pltr at the $65 strike using the monthly option chain. Once I get to my option chain, you're going to see puts on the right and calls on the left. For the first part of my example, I'm looking at the puts, and I want to look 1 month out. So let's go to the next month, which is January, and I am selecting January 17th. It's the 3rd Friday of the month. That's going to be the chain that has the volume and liquidity on it that surpasses the other chains due to the institutions doing all of their put selling and call selling and buying on the 3rd Friday of the month. So if I look at that $65 level, let's look right here. Currently, it's paying $1.66 a share to sell puts. So if you were going to sell just one put, you would need $6,500 for the 100 shares if you're put the shares. But for that, for putting up that $6,500, you are going to receive $1.66 a share. So $166 per contract to put up this particular play? Well, you might ask, is this a safe play? Is this a good strike price? Well, we just looked at that that's a natural level of support for Palantir. But also, let's look at our deltas. This delta is very telling here. This is showing me that it is only a 0.17, so 17% chance that on our expiration date in a month, that this is going to actually envelop this strike price. So that's encouraging because when you're selling puts, you're looking at probabilities, and anything that is really 0.2 or lower is considered on the safer side of put selling, meaning that you will more than likely keep 100% of this premium without being put the shares. However, as we saw, if we are put the shares at this level, it's not the end of the world because there's a lot of potential upside. Now, how could this trade go south? Well, let's say that you're compensated for it. You put the shares at 65. But at the time, Palantir tanks. Maybe it tanks down to $50 a share. Well, you paid $65 a share for it. So you're going to be sitting on, at that point, a paper loss of $15 a share. Of course, you can't forget you got this little premium here, but that won't be much consolation if Palantir drops down to $50 and doesn't recover. But if that happens to you, then you would want to be patient and wait until Palantir started to recover and gets closer up to this level, closer to 65. Then you can start looking at an exit strategy, if you wish, by selling calls. But that does not appear like a likely scenario, but you do need to know the risk if you're going to employ a strategy like this. So all that being said, let's see if I took $100,000, how many puts could I sell if I am using the $65 strike price? To figure this out, just take out your calculator, take $100,000, divide it by 65. That's going to give you 1,538. Well, you know, when we sell puts, we're dealing in lots of 100. So that is 1,500 shares that you would be able to sell puts. So that is 15 puts you would be able to sell. So if you sell 15 puts, that represents 1,500 shares. You would then take that 1,500 times 1.66, because that's what you're getting per share. That is going to give you a premium of $2,490. So that is the income that will be on this side of the equation. So that $100,000 that you just dedicated to this side of the trade is going to produce for you on average about $2,490. Now, if Palantir is having a red day and you sell the put at this level, you are going to receive a lot more than $1.66. So if you were to do this trade now, you would receive $1.66 a trade. That equates to that $2,490. All right, now that you know how to produce income from selling puts on Palantir 1 month out, now let's go and look at how we're going to handle the other part of the trade. This is acquiring the shares and then waiting for a green day to sell calls. So let's assume you're going to go buy the shares today. Now, I don't actually advocate that because Palantir is trading really high right now. When you look at all the technicals on the Bollinger Band, it's at the top. When you look at the RSI, it's over 70, which means we're in an overbought situation. But once that normalizes, you can go ahead and strike and purchase your shares. But for the sake of this video, and because we're dealing with this moment in time, I am going to use the current pricing to take my other $100,000 and just go purchase the shares outright. Let's go see how many we can purchase. Then I'm going to teach you how to sell covered calls on those particular shares. And we're going to see how much we can create in premium alone to add to our monthly income. Now, looking at the opposite end of the trade, the calls, buying the shares and selling calls. Well, this is not the optimum time to buy Palantir because we are trading, like I said, with this RSI in an overbought situation. So if it were me, I would wait until Palantir retreats to actually buy my shares with the second $100,000 that we're going to be trading with. But because we don't have that dynamic right now, let's assume that we go ahead and buy the shares now at about $75 a share and how we would be able to get that. So what you'd want to do, you take $100,000 again, because now we're working on this side of the trade. You divide it by $75, you would be able to buy 1,333 shares. But again, because we're dealing in lots of 100, we'd only be able to sell calls on 1,300 of those shares. So with that being said, let's go to the option chain and see how much money we can get for selling calls against our newly minted shares. We are back on our option chain. We're still looking at that same date. So if we have 1,300 of our brand new shares of Pltr and we acquired them at the $75 level, then I would want to at least sell the $80 level strike price, because I'd want to enjoy that additional $5 from my point of purchase to the call-away price, because that's going to give me $500 a contract, because I'm controlling 100 shares with each contract, plus any premium that I can create. So let's look right here. This is going to show us right here how much premium we will receive. Now, $4.88 is very substantial for the $80 strike price. But I do want you to realize that with a 0.45 delta, there's a good chance that these shares will be called away. If that's the case, that's okay, because you have now created this additional money that you can go sell aggressive puts on. This is the wheel strategy. So in my example, if I sell the $80 call, meaning my shares would be taken away from me at $80, I'm going to receive $4.88 a share. So let's calculate how much money that is. I take 1,300 shares times $4.88. That is going to equal $6,344 in premium alone. So if you're just looking at the premium, let's assume that on our expiration date, we do not have our shares called away. If that's the case, then we're going to hold on to the premium that's been created, the full $6,344. If you do have your shares called away, then this completely blows up your account in a good way, because you're going to now have, in addition to that, you are going to have an additional $6,500 in stock appreciation. But we're assuming no call away, and this is premiums alone. All right, so now let's add our premiums together to see how much total amount we've made in premiums in a given month in this scenario. If you take the $6,344 in premium we made from selling calls, and you add that to the $2,490 that we made in premiums selling puts, that equals $8,834. If you take that $8,834, let's go ahead and divide it by 200,000. We didn't use the full 200,000, but for the sake of easy numbers, let's divide it by that. That is going to equal 0.044. You multiply that by 100. Now we are sitting at a 4.4% return in 1 month. If you multiply that by 12 for 12 months out of the year, you're looking at a 53% return on your money. So anyone that says that you cannot make 30% in selling premiums alone, they're clearly not looking at the right opportunities, because this is a great example of how that can be done. Now, like I said, if you add the call away dynamic to it, this could grow exponentially. But just to revisit one more time, what could go wrong? Well, if something were to happen to the business model of Pltr, let's say something happens to its leader, Alex Karp, and the vision that Pltr has and the forward momentum that they're enjoying suddenly stops. They lose the government contracts. The commercial side of the business dries up. If the stock goes to zero, then you could lose 100% of your investment that you've made in this strategy. So I do want you to go in with eyes wide open on the potential risk. There's no risk-free trade in the market. But if you are willing to jump in the market and get into a quality stock and you have a balanced portfolio, gains like I'm showing you today can absolutely be the reality. I hope you found this helpful and it inspires those of you that are excited for retirement, but it just seems like it's too steep of a hill to climb. You can actually do it on a lot less money than you ever thought possible, but you do want to ensure that you're educated first and that you practice with just a few shares versus going all in on any one stock or any one play. Now, if you're ever interested in allowing me to teach you how to do this for a living, I would love to help you. Click any of the links below and you'll be in my ecosystem and we can look at different ways to help you grow your wealth. Remember, if you were trading with Ashley, there is no trader left behind. If you're interested in one of my other videos that teach you how to produce retirement income with the use of leaps, you can watch that video right here.